so in love with you.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in, and was Warren Buffett right about the stock market, or was he reading the wrong signals, and did he make a very costly mistake by investing so heavily in the stocks of new home builders? So today we're going to go over an article that's going to go into detail whether or not they believe that Warren Buffett made the right decision. Now, personally, I find it hard to believe that he made the right decision. One of the reasons that is because the supply of new houses right now is astronomical. We're sitting at 7.8 months of supply for new homes. In order for the market to be considered a buyer's market, it needs to be 6 months. So we are well over the 6 months required for the market to be considered a buyer's market. And not only that, as we can see here from this graph, new home prices have never rebounded. Even in the face of outrageous buying incentives, the median sales price of new homes is down 13% from October of last year. And we can really see how aggressive some of these new home builders are being with their buying incentives. For example, Lennar is now offering a 4.5. They were offering a 4.25, but they're offering a 4.5%, 30-year fixed rate, and $10,000 back towards closing costs. This is in my own local housing market. But on top of that ridiculously low interest rate, they're also slashing the prices on almost all of their inventory and spec homes. You guys can see here that some of these houses are being slashed 15 to 20%. The first one's being slashed for $83,000 and the second one for $77,000. And this is happening around the nation, not just with Lennar. And on top of that, home builder sentiment goes negative for the first time in 7 months, thanks obviously to high mortgage interest rates. Now, as far as the stock, as of the making of this video, it's about 108. And I believe when Warren Buffett purchased, he was at about, I think, $130. So personally, I'm not sold that he did make the right decision, but we're going to read an article from Investor Place that's going to give us some additional perspective on whether or not he did the right thing. And if you guys can, do me a favor, like this video, and understand I'm not a financial advisor. I'm just a normal guy trying to be transparent and guide us through the uncertainty in the housing market. And this will be linked in my description. The name of this article is Housing Market Crash of 2024. Did Warren Buffett read the signals wrong? The Oracle of Omaha went deep into the housing sector. He invested in Lennar, NRV, and DR Horton. So the number one biggest new home builder and the number two biggest home builder as well. People seem to be worried about a housing market crash. Warren Buffett isn't one of them, according to this article. Buffett's most recent 13F filing shows he bet big on the housing market. Buffett dove headfirst into the sector and bought shares of 3 home builders. Data, however, doesn't discount a housing market crash. Again, the National Association of Realtors is now starting to get worried about a housing market crash. What does that tell us, y'all? It shows existing home sales in August fell to their lowest point since the start of last year. Mortgage interest rates, which hit 7.31% last week, are their highest since the year of 2000. And as of the making of this video, rates are over 7.7% right now, and they're probably going to hit 8% at some time this year, and the 10-year is probably going to hit 5%. Despite that, the average U.S. home price of $495,000 remains stubbornly high. I agree, although down from last year's record $552,000. So I don't know if you guys understood, but we're down off peak on average $57,000 still. So we're still $57,000 on average below the last peak. It's over double the average of $210,000 price from the year 2000. High interest rates and high home prices are not normal. Thank you, Investor Place. Home builders do best in falling rate environment. It suggests a housing market crash could occur in 2024. Investors can only ask, did Buffett read the market wrong? Let's look at each of the builders he bought and see why he might have decided now was a good time to buy, whether there's a housing market crash or not. Starting with Lennar, the home builder Buffett bought the fewest shares of is Lennar. He purchased shares worth only $18 million. It is the second largest home builder by the number of homes delivered and set to capitalize on the housing preferences of home buyers. In its last investor presentation, Lennar noted Florida was its biggest market. I'm actually surprised, with 29% of its 50,000 homes or so total deliveries. Lennar is also a diversified home builder with a presence in 19 states. It offers homes across a full spectrum of first-time, move-up, active adult, and luxury. The average price of homes is $448,000, below the national average and down from almost $500,000 last year. Deliveries and new home orders are showing strength despite conditions. Year-to-date deliveries are up 6% to 49,292, while new orders were up 8% to over 51,700. Now, Lennar stock is down 14% from its July peak of $133 per share. It also pays a 1.1% dividend. Here's NRV. Buffett bought $67 million worth of NRV, so way more NRV. It's the smallest of the three home builders with a market cap below $20 billion. Unlike Lennar, it doesn't pay a dividend. The stock is also down only 7% from all-time high it hit this summer. NRV focuses on building homes in 15 states, primarily in the Mid-Atlantic, Southeast, and Midwestern regions. The Washington, D.C. metropolitan area represents 21% of total revenue. That's interesting. It sells homes under three brand names: Ryan Homes, NV Homes, and Heartland Homes. Each is a different quality level. Its average selling price is $447,300, not much different from Lennar. It's also seeing business pick up, even though everything says that shouldn't be happening if there's a housing market crash on the horizon. New orders are up 29% in the latest quarter, just as cancellation rates are falling, dropping to 11% from 14% a year ago. One thing that sets NVR apart is that it typically doesn't buy land to build on until it's ready to build. That's very smart, so they're not stuck with spec homes like Lennar. The asset-light model makes it much more flexible to changing market conditions and keeps its capital requirements lower than the competition. That's actually very, very good. Thus, where Lennar's trailing return on equity runs around 18%, NRV stands at a robust 45%. It's likely this is one of the reasons Buffett likes this builder. That builder sounds way better shape than Lennar. Now take a look at D.R. Horton. D.R. Horton is both the biggest home builder in the U.S. and one Buffett spent the most on. He bought almost 6 million shares at around $121 a share, for a total value of approximately $695 million. In comparison, we don't even need to pay attention to the other new home builders because he's got so much more money in D.R. Horton. That's surprising to me, to be honest with you. NAR says there are around 1.1 million unsold existing homes, or just 3.3 months worth of inventory. It's considered a shortage when there is less than 6 months supply of existing home sales. It's why Buffett was attracted to this sector. If existing homeowners aren't putting their homes on the market, the new home builders will benefit. It explains rising new orders and deliveries with falling cancellation rates until, unfortunately, you guys, right now. So shortly after this article, everything completely started melting down. Literally in almost every single market, it's completely dead right now. But the article doesn't agree with that. Ultimately, it looks like Buffett didn't read the market wrong at all. In fact, he read it just right. It sounds to me like an accountant wrote this article. It's a little bit delusional in my opinion. Let's keep going. Because these are otherwise strong, financially secure businesses that will survive even if the housing market crash happens. You all comment below. Let me know if you think that Warren Buffett made the right decision. A lot of people are still hung up on supply and demand and only looking at supply and demand. Now, personally, you guys already know I've traveled around the country. I've flown into states to walk some of these new communities. And I believe that actually new homes are going to be a primary catalyst at prices continuing to crash and go down. And the reason I think that is home prices are just too expensive. The ridiculous buying incentives that they're currently offering right now are no longer working. Essentially, what needs to happen is we need prices to continue to go down because normal consumers, we just can't afford these prices. So unless there's some type of government incentive to give to home builders to continue to build, I personally think from the outside looking in that he did make the wrong decision, especially with D.R. Horton, considering he spent roughly $700 million and more than likely he's probably down, $10 million right now? So I don't understand why the article is not acknowledging that he's actually lost money since that. And also don't forget this, we're now heading into fall and winter dark months. Interest rates are near 8%. Home buying demand is absolutely crushed. Supply is shooting up. The consumer starting to unravel. Chapter 11 bankruptcy shooting up. Chapter 13 bankruptcy shooting up. Corporations melting down. Commercial real estate. Long-term rental market meltdown. STR bans. I mean, how much more headwinds do we need for people to start reading the writing on the wall? But maybe I'm wrong, and that's why I really look forward to what you have to say in the comments. And other than that, guys, do not forget, join my morning lives. Usually they start at 8:45 a.m. Central Time, Monday through Friday. And if you're out there investing in real estate, you already know I wish you luck, and I hope you win.